You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Joe Benazzi from OptionPit.com, and Henry the FLOWMASTer SCHWARTZ from CBOE. The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again for your bi-weekly options extravaganza known around the globe as the Option Block, or what the cool kids call the old OB. My name, of course, Mark Longo from the THE OptionsInsider.com, as well as from the network upon which so many of you are beaming in these days. If I sound a wee bit different, it's because I'm not coming to you from our Chicago studios. Nope, I'm up in the southern studio. I will be here for the rest of the year into the early part of the new year. So you'll be hearing me sounding like this throughout the rest of the year. Don't worry, we have our usual array of content coming at you today with the Option Block and TWIFO. Tomorrow, of course, Vol Views and Options Oddities. And, of course, we have the holidays coming up, and then some other things popping off towards the end of next week, listeners. So there will be no shows next Thursday and Friday. Trust me, I'd much rather be here talking to you folks on the network. But sometimes life intervenes in interesting and unexpected ways. So fun things for you folks this week on the network. And we'll see. We'll try to put together maybe some retrospectives or something like that for you folks to indulge in next week, so you're not stuck hanging out with your family. You can listen to us if you need a little bit of a respite out there. And of course, if you do like what you hear, this and anything else on the network, like you've been doing all year long, throw a like, a star, a comment, a rating, and review. All of that stuff at the end of the day does contribute to the network. Of course, it's been a great year for the network. We appreciate all of you folks who've helped contribute to that. And of course, if you want to go above and beyond, you want to listen to some great pro content, man, it's been quite a run on the pro side as well. We have closing in on 300 episodes, I want to say. So the second you hit that join button on the pro side, you are off to the races and some of the best content going out there, including awesome pro Q&As. You name a person, they've probably been in the hot seat over the past couple of years with great content, options oddities the end of every week as well, which is a fun look back and look ahead onto some interesting trades and trends we're seeing out there on the usual activity front. It's kind of like the odd block on steroids and even crazier, if that's possible. And then, of course, everything else on the old network, theoptionsinsider.com/pro. Great giveaways, all sorts of fun. As we see who's joining me for this final option block episode for 2023. Man, this year has flown by, listeners. First, let's go out to the dark, the stormy, some might say hellacious shores of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, how go things on the hellacious shores of Maine, sir?
It is actually sunny and clear, but breezy. I see white caps on the water, so it's a little breezy. The lobstermen not having a great day today.
You know, Andrew, that's interesting because it's overcast and dreary here in normally sunny Austin.
Oh, you're here for the show. Okay, I don't have to be here then.
Before you run off really quickly then, Andrew, I'll let you kick it off if you like. How about your thoughts, ideas, things that resonated for you from the mad year that was 2023, sir?
I think if anything for this year, it's everybody worried about everything being horribly wrong and none of it came to pass. It was like, okay, rates are going to go to the moon. Didn't happen. Banks are going to fail. Didn't really happen. The AI boom is going to die. That clearly didn't happen. Like everything was supposed to be just terrible. And it all didn't happen that way. So I think that's the
but Andrew, you're the one that was telling us that was going to happen.
Well, I was wrong.
Okay. Just wanted to hear that out loud.
I guess I must have been totally wrong.
There you go, Mr. Rock Lobster. Thank you for joining us for this year of 2023. We will check in with you in the new year. Have a good holiday with you and your family. And yes, you were leading us down that dark path, and now you're saying none of it happened. So there you go.
I mean, if it didn't happen, it didn't happen. What are you going to say?
So you say, Mr. Tinfoil Hat. We shall see. We shall see out there. But thank you for joining us throughout a fun and a memorable year that was 2023. I also heard a very tinny voice that can mean none other than the meatball, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the program. We'll get your review in a minute, sir. How are things in the land of Austin?
Like I said, it's a little dreary today, but, it's a fine day to be alive. That's all you can ask.
It's a low bar, but I think we meet it and or exceed it here on the program every week. And then out to the land of St. Charles, where they're always happy to be alive because they're a very optimistic bunch. Mr. Uncle Mike TOSAW, welcome back to the program to you as well.
Always a pleasure to be here.
And last but not least, beaming in, I think, from CBOE East. I guess we'll find out. He is the FLOWMASTER, a.k.a. Mr. Henry Schwartz from the aforementioned SEBO. Check out all their goodies, sebo.com/RMA. Mr. FLOWMASTER, welcome back to the show. To you as well. One final time for the year, sir.
Yes, I'm excited to be here. It's been a record year for options. There's obviously been a lot going on. I do agree that there was a lot of doom and gloom, and really, knock on wood, everything's kind of still working, and the economy's still holding together, and there's bad things going on in the world, but kind of in the financial sector in the U.S. at least, things are actually pretty good.
And things are also good in the trading block, so let's get to it.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down, surprise, surprise, what the heck is trading. If you've been listening to the show all year, you should know this song and dance by now. But of course, new people joining the network and indeed the Option Block program all the time. So welcome, first off, to all of our new folks out there. Going to do a little bit of a different show this week. Like I said, this is our final show for the year. So we're going to do a little bit of what's going on now, but also a lot of looking back on this mad year that was out there in 2023. Really quickly, let's set the table. Coming into our final show of the year, so easing into the end, I should say, of the trading year. Obviously, we have one more week to go on the actual trading calendar, but for our purposes here on the show, winding into the close of the year. S&P still vacillating around this 4,700 level. We managed to break through it yesterday, sold off a little over somewhere close to 1.5%. And it's funny, you could tell the tone in the markets now has shifted because even just that one day, little over 1% sell-off was enough to make the hashtag stock market crash trend around the world. People were freaking out and losing their mind off one day's sell-off. That just kind of shows you where we are. People are just so used to this near endless rally we've had post-Fed back in November, and certainly post the most recent Fed, that even one day of sell-off was enough to spook everybody out there. But coming into the start of the show today, we are back to the green. It did seem like maybe the worm was going to start to turn a little bit. We did rally up to around 47.40 and change, 47.42 before selling off back down to about 47.14 or so. It seemed like we were trending lower. Maybe we're going to break the 4,700 level to the dark side. Seems like things have stabilized right now. But then again, you never know. The worm can turn on a dime. That means as we kicked off the show, listeners, we had VIX looking a fair bit juicier than it was this time last show. North of a 14 handle. So not back below a 12 handle, but actually north of a 14 handle. About 14.40 when we kicked off the show. Up nearly 2 points. About 1.9 points, which is interesting when you hear about some of our end-of-year talk from last year and what people predicted for their range for VIX. Getting a little bit more interesting. VVIX also getting more interesting. 94, up 6 points. Again, we're kind of getting almost into, I won't say upside crash, but upside juicing of vol, shall we say. All this vol continuing to creep up. Definitely a factor in this persistent upside. A little bit of a tick-off downside yesterday. Didn't hurt either to getting VIX a little bit frothier, a little bit juicier. But if you noticed all past week, VIX was very stubborn around that 12.5 handle post-Fed. It couldn't really break it much to the dark side. So there is clearly, at least for right now, a little bit of a floor for how low vol can go. UVXY, a little bit north of a 10 handle, 10.1, up a little over 1, about 1.2 points. So makers of that are happy. They don't have to reverse split it. The market did it for them, at least for today. SVIX taking a rare hiatus right now, 33.40 when we kicked off the show, down about 3.3 points on the week. And everyone's favorite UVIX back up north, not just of a 14 handle or even a 15 handle or even a 16 handle. It's north of a 17 handle, 1770 when we kicked off the show, up nearly 3 points, about 2.7 points more it was this time last week. So if you're looking for a little bit of a reset in UVIX, for all you downside put lovers, maybe this is your early Christmas gift out here. But a lot to unpack. Let's go around the horn. Let's start with the greasiest of meatballs. How about that? Let's mix it up. Let's go out to the greasiest of meatballs. Sir, first off, what's catching your eye out there in this kind of final trading week, at least for us here on the show? And then B, as you're looking back at this mad, tumultuous year that was 2023, we'll get to some individual trades in a few minutes, but looking back at the full year, same question I asked Andrew. What are some of the trends and developments and highlights that stood out to you? Could be options, could be general market, could be vol, could be all of the above, sir. Have at it.
Well, for today, things look like we might even turn red today, the way we're trading right now. But the trend that we've seen over the last couple of weeks, and that trend has continued today, is the other 493 stocks, the mid caps, the Russell, are market leaders, while some of our mega caps, notably Apple, are a little softer on a relative basis. The Qs are not leading us higher. It's the Russell 2000 and the MDY and RSP is the equal weighted S&P is beaten the regular S&P. So that's kind of my thoughts for today. My thoughts for the year. I mean, Henry and I actually were talking about this earlier in the week. The market is right off an all-time high, and yet so many stocks are still just trash. It's really been leader-led. it's been the best of the best in the banking, best of the best in technology, and those. The rest of the market kind of still stinks. There's a reason SIBO's out with this dispersion index, because the market is really dispersed. There is still a lot of quality companies that are being treated like trash, and likewise, you've got a lot of names that are huge values that have big multiples that is a little eye catching. You're not used to seeing companies that are $1 trillion have PEs in the 60s, and yet we have that. So, I guess the other major point is that people assumed the Fed raising rates was going to crush the market, and it did just the opposite. We did have a little bond market rout from end of August through end of October, but then we got into November and it was straight up into Thanksgiving, and that is outside of a eye-catching swing yesterday. It's been pretty much that story through December. So that's kind of my takeaway for the market for 2023.
It's interesting you mentioned that, because how many times have we said that on this show throughout the year, and very much here in Q4? All the names we talk about in the odd block and everything, they all peaked on February 2nd, or some of the late bloomers maybe on Halloween, but none of them are at their high right now. You're right. Once you get outside of the Magnificent Seven that everyone loves to talk about, it's a very different market. Hence why small caps are so fascinating right now. They're kind of marching to the beat of their own drummer. But a lot of fascinating things out there. Let's go out to the land of St. Charles now. Things are always fascinating. Also happy. I think of St. Charles kind of like Whoville in The Grinch Who Stole Christmas. Everyone's just happy, always decorating for Christmas, 24/7, 365 out there. Just a endless scent of pine and gingerbread in the air in the land of St. Charles. Mr. Uncle Mike, sir, what's catching your eye out there this week in Whoville? And then be permeable that you are as you look back on this mad, insane, confounding year that was 2023, sir. What stands out to you?
It's ironic that you mentioned that, because my wife's name is Kristen, and she has been called Christy Lou Boohoo, the smallest who of them all.
How did I know?
So anyway, so a couple things in terms of what's happening now in the marketplace. I don't see a lot of movement going into the end of the year, but I would have been wrong had I said that yesterday. So we'll see where we are with that. Just to kind of what I'm watching right now is the bond market at this stage, and is this going to be near the upper end of a more near-term channel? And if it is, will it break into or break out of the near-term channel with which it is? So that's one thing I'm definitely watching right now. It's kind of weird in that you're seeing a green market and a red apple. You don't see that very often in the market these days. So that's kind of what's piquing my eye in the markets today. In terms of this year, two conclusions that I've come to this year. The first one is that I'm old, and I'll explain why in a moment. And then the second one is that interest rates play a major factor again. And as a financial advisor, this is kind of a new market to me in that I've been an independent advisor for 14 years. I've been in the business for roughly 20 years in one way, shape, or form. And so one thing that I've always had to do for years and years is in the fixed income section of someone's portfolio, whether you have them in 70 stocks, 30 bonds, or 60-40 portfolio, whatever the case may be, because I always have my own little option snippets, if you will, to kind of make, that's what makes me me. But one thing that I've always had to do is come up with something to replace the anemic fixed income market. Whereas in the 80s, you could say, oh, sure, go into a bond fund. You can make 7-8% in it, put some money in the stocks, and you're fine. I've never had that as an advisor. I've always had to, well, let's do these crazy silver collars. Let's do this type of collar. Let's do this, this, that, and the other. Let's sell a lot of premium on this and then buy a put, and then they'll create a bond-esque type of risk to reward ratio. And I don't got to do that anymore because I can actually just buy a 1-year bond and get 5% on it if I wanted to. Now, I still believe in creativity, and I still have been selling covered calls on bond funds and have been doing things like that. But the main thing that has come around for me this year as an advisor is that interest rates are back. Now, the first thing that I had mentioned, I'm old, kind of relates to interest rates coming back. So, as I've talked about on strategy blocks throughout the year, is that synthetically speaking, if you're getting a 0.001% rate of return on the cash holdings in your brokerage account or something like that, which is you likely are unless you're at Interactive Brokers and it's above $10,000, but at most places you're getting something like that, then you really need to have a good understanding of synthetics. In other words, selling a covered call is going to be more beneficial than selling a cash secured put because the premium is going to be higher. And that's because of interest rates. We have not had this. So one thing that I looked into for my clients is that, okay, I'm selling puts. And sometimes in years past, it was better to sell puts over doing covered calls because some clients have a larger balance, some clients have a smaller balance, and you can save a commission sometimes if you're selling a put versus doing a covered call and a put. Well, those days are gone. But what I looked into this year is I called up TD Ameritrade, and this is before we moved up, before the big Schwab transition last Labor Day. And I asked them, I'm like, well, do you guys offer release on cash secured puts? And they didn't know what I was talking about. So back when I first got into the business, when I was working at Options Express back in the old days, what they would offer was, I believe it was 90% release on treasury bonds in some way, shape, or form. So in other words, let's say that you had a cash secured put. Instead of having to have all of the cash up to the strike price to it, what you were allowed to do back when the dinosaurs roamed the earth or back when interest rates meant something is you could use some of that cash and put it into a government treasury of some sort. And there were different maintenance release percentages, a little bit higher for shorter term bonds, a little bit lower for longer term bonds. But either way, you could use that money to get some type of release on it. And with the short put, you'd only have to have maybe 10% of the of the risk involved sitting in the worthless cash, and the rest of it you could put into some type of government treasury, and that was called release. And so when I called the trade desk at TD Ameritrade, they had no clue what I was talking about. And so I'm like, no, I need to talk to someone else. So I kept talking to people. And so finally, I got through to a guy who had been in the business as long as I was, who knew what the heck I was talking about. And he's like, yeah, we can do that. But in all honesty, you're going to have to jump through a bunch of hoops because there's not a lot of people around here that are old enough to remember when that was actually a thing now that we have interest rates again. So I thought, oh, great, I'm the old guy now. I actually remember when we had interest rates the first time, and that was actually a thing. So it's for those reasons that I feel that I am old now, that I'm no longer the young whippersnapper new to the business. I'm now the old man. And those are my two takeaways for 2023.
There's the Perma Bull coming to us with a dark and disturbing observation to end the year. Uncle Mike grappling with his own mortality here on the option block. But an intriguing observation nonetheless. Thanks for that. I was hoping for a little bit more uplifting observation from the year. Maybe we'll have to go to Henry. I guess Henry now is the guy who needs to lift us all up for the year. Henry, you are known for your deep data dives into the market at things like OIC and others. Maybe we'll get a nice glimpse of that on the panel next month in Chicago. That should be a fun one. But before we get there, really quickly, your thoughts here on our final recording week for the year, the penultimate trading week for the market. What's catching your eye out there? And then B, a same question I asked everybody else as you look back on this mad, insane, fill in your adjective of choice year. They all apply. What really resonates to you, sir?
I mean, it really has been an interesting year, and I do agree that we always talk about paradigm shifts, and most of the time it's kind of bullshit. Reacting to vol's higher now, so now we're in a higher vol regime. But the interest rate situation, rates around 5%. That's a real shift, right? And it happened very quickly, obviously, and there was some fallout, and that's kind of that really is changes your way of thinking, right? The opportunity cost of money is significant now. So, I think that, when I look back on this year, I'll probably say, well, it was the year of zero DTE. It was the year that interest rates basically came back from zero to kind of something a little more normal. If you're old enough to think back to when there were rates that were 6, 7, 8%. And I mean, the other thing that I've been putting a lot of thought into this year is kind of the concept of leverage. It was at a Bloomberg panel where Tom Sosnoff mentioned it, and I went back and played around with the data, and I think all of us are coming from a market maker standpoint, which is really we just want to price things accurately and manage our inventory, and we don't think a lot about what's really the leverage in this position and why you might want to use take advantage of that leverage. And that really is, especially with these short-term contracts existing and being so active, that really is part of the equation nowadays. And I'll give you a quick example from yesterday, which was a really weird day, right? We were kind of dead, and we were up on the day, and then things went insane for a while for the last couple hours a day. But I was kind of punting around, and I had sold a couple of puts, and then was trying to nibble back, and I left a bid in a 47.70 put, a 0-day in SPX, a $3 bid, and went out for a meeting actually, and my phone dinged and I got filled, and that was all it was doing was kind of locking in something from before. And at the end of the day, those puts, which I paid $3 for, expired at $71. And
nice trade.
Well, I know. I think
Merry Christmas to you.
I only netted a couple $100 because, like I said, I had sold something earlier, so I was just locking in. But had I not, then I would have had a very sad Christmas. And it also just, you look at it, you're like, you know what? This happens every once in a while in our universe. These 3, 4, 5, 10x returns, which is what the whole point of options, right? Is this convex asymmetric payoff is very, very powerful, and I think that people need to understand that. I think a lot of people do. I think some people don't. And it's that it's just I think it's been that kind of year. A lot of a lot of up and down and kind of some interesting market action, and I'm excited to see what comes next year.
As am I. We will get to all that fun a little bit later in the show, listeners. First, let's go around the horn. Let's do a quick rundown of the markets today, because today's show is not really about today, listeners. It's really more about the year that was and indeed the year still to come. But right now, actually seeing a decent amount of paper out there on the tape. Let's start in VIX land, as we have done all year, listeners. Like we said, VIX popping a little bit right now. And VIX looking a little bit more robust from a volume perspective. 400,000 contracts exactly on the tape right now. The ADV 686, that's coming in a little bit. But again, that's still a decent amount of paper for this time of year. VIX, high degree of seasonality in the August and December timeframes in particular. SPY, almost 6 million contracts right now, 5.7 million. The ADV 7.03, that's nothing to sneeze at. Usually SPY we see 4.3, 4.5 right now. So SPY looking pretty robust. The S, not that far behind. 2 million contracts up already in the S. The ADV up 3.13 million. So if you thought it was going to be a quiet end of the year, at least from a volume perspective, these are saying maybe not so much. Small caps, 633. That's decent. Not quite at the... Well, it's getting a little closer to the ADV is coming a little bit now. It's about 1.33 million out there. So 633, decent, if not blowing the doors off. We were past a million this time last week. And the Qs, 2.42 million. The ADV, 3.39. So Qs also looking pretty robust. Out there on the single name front, are we ending off the year with a robust single name day? The answer is kind of. Cost you 226,000 contracts to break into the top 10. That gets you to the old alphabet Class A. Trading 140 pretty much exactly right now, up about 1 3/4 on the day, or a little over 1.25%. Number 9, good old Creedence Clearwater Revival, a.k.a. CCL. I don't know why I keep making that joke. It's amusing, I think, to only me, but I find it fun nonetheless. CCL, a.k.a. Carnival Corp, 1912, up a little over $1 right now, or nearly 6%. So a nice pop for carnivals or cruise lines back in fashion. In fact, I look at this top 10 right now. It is very reminiscent of what we've been seeing in here pretty much all year. Couple of exceptions. I'd say Credence would be one of them. But outside of that, it's really most of our usual offenders here to end the year, which is appropriate. It's kind of how we started the year. And it's kind of also how we end the year. Number 8, speaking of usual offenders, this is Meta. Good year for them. 238,000 contracts on the tape today. Meta 351, 10, up about $1.80 or about 0.5% out there. So a nice little pop for Meta on the number 8 spot. Number 7, keeping it in the M&A and tech-related names. This is Marathon Digital Holdings. You know them. You love them. Mara, 273,000. 23 and a third. My goodness, they were $14 a little over a week ago. This name on the rampage, of course, driven by all the madness out there in the realm of crypto. If you want to see what's popping off out there, make sure you're checking out our Crypto Rundown show. Even if you're like Uncle Mike, even if you hate crypto, you should at least be cognizant of what's going on out there, because there are some moves like this going on that you could miss otherwise. So intriguing stuff. Amera, number 7, 273,000. Number 6, Micron. Everything old is new again, and Micron certainly fits that bill. Number 6, 336,000 contracts. Micron, 84.05, up $5.36, nearly 7% today. So everything old is also quite juicy today. Number 5, getting back to the usual suspects, it's AMD, 139, up $3.50 or 2.5%. So Chip Zone coming a little bit higher than normal today, 354,000 contracts, and the number 5 spot. Number 4, keeping it in the A tech names, it is the Amazonians. They've usually been in the 3-4 spot pretty much all year, so this is pretty much what we expect from them. 152.75, up about 60 cents, so not a banger day for them compared to some of these other names. Number 3, you can pretty much guess what it is these days. It's NVIDIA, 485 and about a half. It's kind of going back and forth with Apple for the 3/2 spot. Today, number 3, up 4 1/3 or about 1%, so a comparatively quiet day for NVIDIA. Number 2, I kind of let the cat out of the bag, but you know what it is by now. It's the Fruit Company, and I just closed that one accidentally, so let me just pull that one up again. There we go. I don't need NVIDIA anymore. I already did that one. There we go. Southern Studio listeners, all kinds of fun. All right, here we go. Apple, a 194.16, off about 70 cents or about 1/3%. As their Uncle Mike alluded to, a rare day where Apple is red and the market is green. I thought we conclusively proved throughout this year that cannot happen. But today it's happening. Apple, decent paper, 652, nothing to blow the doors off. And number 1, you know what it is by now, listeners. It's Tesla, 251.11, up nearly $4 or 1.6% today for them. So a nice little pop for all things Tesla. On the earnings front, though, not a lot going on. We got FedEx, we got Micron coming up this week. We got CarMax, all sorts. Actually, we had Micron yesterday. We had CarMax and Nike today. That's really about it. It's time instead, listeners, you check out all the data for yourselves. TheOptionsInsider.com is the place to go as we go on into our final odd block of the year.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the wild, the weird, the wonderful world of the Odd Block. I want to break down some of our stalwarts and highlights from the year. Before we do that, I see the eye of the FLOWMASTER has been busy out here. So let's give the folks a little bit of what they came for, Mr. FLOWMASTER. What's catching your eye out there in yield markets today, sir?
So I'm looking at probably the biggest one I've seen in a while was yesterday in Marvel Semiconductor. And I traded this one, but this one turned out to be a very hot potato in terms of trying to ride the flow. So the average daily volume in this name is around what is it? It's only around 40,000 contracts. And yesterday the call volume was 75,000 contracts, and almost all of that printed really early in the day in the December 22nd. So those expire tomorrow. 62 strike calls. So we saw almost 47,000 contracts print, and it was lots of aggressive sweeps, right? We talk about kind of these opening sweeps that we really pay attention to, whether the buyer really knows something that the rest of us don't know, or whether it's really just kind of, a snowball picking up mass as it's rolling along. But the early buys in these things were just a few pennies. And then some of the larger trades were 17 cents, 23 cents, 35 cents, all in the first 10 minutes of the day. Literally, I think we were up about 30,000 contracts before 9:40 in the morning. The stock went from 59.70-ish up to 60.5 as this was all happening. So it was one of these kind of frenzy cases. But it also, so I bought a little stock, and I kind of probably made a dime on some stock. And but it was also one of those cases that we talk about where maybe people are kind of trying to play each other, and so. It ran out of steam. The stock sold back down, and then in the afternoon, the stock got hammered with everything else in that last couple hours of the day. And so, like I said, we look at this. We basically look at this kind of over trading or something, right? People possibly buying more than they really want because they want to kind of kick off a buying frenzy, which they can then just sell into. So net open interest increased by about 9,000 contracts. So that's kind of one of these big examples of, speculative action where the stock starts to, really, get a lift. Other people probably are jumping into the mix, and there doesn't really look like there is anything behind it. I mean, stock's back up a little bit today, 59.5, but it'd have to be at 62 tomorrow for these guys to make any money. So that was a really interesting one.
All right, I like it. Making some money. Then maybe not as much as you might think, though, in good old Marvell. Another name is kind of popping up on our radar again this year. Speaking of names that pop up on our radar, you would not think, looking back on the year, Mr. Flowmaster, that a cheap cable company would be on our list as often as it was this year. But it sounds like you had a little bit more fun on your radar this week out there in everyone's favorite, at least from an options perspective, cable provider. This is Altice USA, cable name out of New York, ticker symbol ATUS, ATUS. Talked about them more than once, listeners out there. Popping hard today, 31 cents, trading $2.60, or about 13.5%. Obviously, this is one of those names as the stock and option. We won't belabor that today, but intriguing stuff nonetheless. Mr. Flowmaster, what did you notice out there in ATUS today?
So this one, everybody's gonna think I'm just a degenerate day trader, but I actually was in this.
We already
one too.
think that. It's okay.
All right. Okay, fine. I was in this one too from some call buying on Tuesday. Stock, like you said, it's a under $2.50 stock, and I saw somebody, a customer, lift the Jan of 2025 5-strike calls, and also some shorter dated 2.5 calls. And it's like you said, sometimes you think about this, and the stock itself is kind of an option, right? It's got $2.50, it can go down, and it's got infinity, it can go up. So I bought a little bit of stock. Held on to it, and got out today around 255-ish. But what's interesting though is that flow on Tuesday was not an opening buyer. So this was kind of another one where it looks like something speculative, something that might catch a little bit of fire, and in the end it really wasn't. I don't know why the stock's up 13% today, but it is, and I took it for a little ride, and I think like a lot of other people, I don't really want to have much on over the Christmas week. It's going to be quiet. Nobody's going to be around. So I'm just trying to kind of clean things up, trim things, take tax losses for the things that, as Mark Sebastian said, plenty of things in my portfolio that are down 90%. And it was another good one.
Couple lessons to take away from that, listeners. One, the Flowmaster is a degenerate day trader, but we love him for it here on the show. B, he went to the stock. He didn't go to the options on that one, so maybe an intriguing lesson for you folks out there as we keep on rolling. I want to get his thoughts on some of these other. I have my own thoughts on quite a few trades that resonated to us this year. Of course, we track a legion of trades for your listening pleasure throughout the year, listeners, and we'll break some of them down. We actually have some more to get to on oddities tomorrow as well, so that should be fun. Before I do that, before I get into some of mine and get your thoughts, Henry and Mark, Mr. Flowmaster, Mr. Meatball, you guys are looking and analyzing and crunching flow out there all the time. Anything as you look back this year Any trades really stand out to you? You want to highlight, sir?
Like individual equity trades, things like that.
Individual, yeah, equity option trades. Someone bought calls and they worked out. Someone bought puts and they didn't. Someone sold a line in the sand and they blew through it. Whatever resonates to you.
I mean, do you want the unusual stuff like all these mad call buyers, and then Intel announces a spinoff, or these big GM 1x2 call buyers, and then GM reinstitutes guidance and does a buyback, or call buyers in Valley, and then they announce a spinoff, or which one of those do you want?
We can hit on all three real quickly.
Yeah, I mean, it's been a year where you've definitely have some of what Henry has talked about, but there have been some pretty interesting plays. I would say, without getting too deep into those, let's talk about ChargePoint and the fact that was maybe the most active contract where the only person that made money all year
was the broker. That one. Early on this year, I decided nope, no more ChargePoint, because you're right. It's such nonsense paper over and over. Whatever broker conned someone into doing that flow made a boatload. I don't think anyone else did.
No, absolutely not. And they had some of that in like Lumen and a few other names. And maybe it's finally coming to fruition. But I think we spent an entire year of everybody speculating on Snap finally having good earnings and just failing at that stock, falling on its face time and time and time again. I think that ahead of earnings, I thought that was kind of interesting. A more recent one was this big, and I know I let off the top of the show with this, but look at the volume in RSP over the last couple of weeks in options. The Jan open interest is relative to what you would normally see is astounding. And so let me put this in perspective. For March, which has been around a while, I want to say the total open interest is maybe 25,000 contracts. And Henry can probably tell us right off the bat. And then in January, you have this buyer that's long 95,000 of the 160 calls. There's 30,000 open on the 165s. We saw a big put seller at the 150s yesterday. The amount, the big uptick in trading in that has really surprised me in the last couple of weeks. And then really the story of the year is 0DTE and what that is kind of two paradigm shifts in 2023, right? One, the change in interest rates. Two, the acceleration of near dated options activity. And then three, you would say maybe the third story for the overall year is dispersion. But that would be kind of what I would say. And Henry, a question I just got asked is, do you think any of that follow through yesterday, or do you think 0DTE, caused some acceleration yesterday, relative to, if we only had weeklies or something like that? Do you think that it had a hand in not causing it, but exacerbating some of the last, half of the move?
I came in this morning and one of our quant, Bob Levy from Hanwick, said, did you see the story in Bloomberg about 0DTE causing that sell-off? And I said, let me go look at the data, because, there's so much misinformation and confusion about about positioning and how that piece of the business works. What I look at is this SIBO open close data, which specifically the data set we sell on Data Shop. It specifically shows the customer buying and selling, and then market maker buying and selling, and the firm buying and selling for every contract in 10-minute intervals. And since SPX only trades on SIBO, it's very easy to see. You see the entire picture. And I'm looking at it right now. I can Mark, I'll send you picture. We can put it on Twitter. I don't mind. There were no positions as we sold off, right? And it was a pretty violent slide, right, from like 4770-ish, down to below 4700 in an hour and a half. I see market makers long a little bit of 4765s as we go through that strike, and then no positions that were bigger than a few thousand contracts. So now this is not, there are zero DTEs in other products, right? And to be fair, you'd really want to see if you can what you can learn about the flow in SPY and the flow in the E-mini futures options, which have zero DTEs, but I doubt it. I really doubt it. I mean,
I could see how a few thousand contracts that, 3,000 contracts in SPX is not tiny. It's not huge, right? It's not thousands and thousands, but I could definitely see a scenario where it certainly was not the cause, but maybe a little bit of a contributing factor to some of the severity because, when liquidity starts to dry up, 3,000 contracts in a normal day is nothing. When liquidity starts to dry up, that starts to be a kind of a little bit of a different animal. And so if somebody was short those at next to nothing and then tried to cut and, kind of caught themselves and tried to cover, you could see that being a contributing factor, but under no circumstances does it look like it's the cause. I think that would be maybe my assessment of the situation, even with those positions not being huge, they could definitely help out. But I'm with you. To blame it on zero DTE is ludicrous.
Yeah. I mean, the other thing that goes on in there, and then we can stop talking about it, is, remember there is buying and selling and spreading and everything else going on in there. But the predominant flow that we see early is vertical spread sellers, right? We've talked about that before. And over the course of the day, they leg out of the short once it gets cheap enough. And so the fact that this all kind of happened 2 hours, with 2 hours to the close, a lot of those were already closed. I pay a lot of attention to the Facebook and Reddit forums where their DTE traders kind of compare notes, and a lot of them were like, "Wow, I got lucky. Just happened to close my short leg," because they trade these things. A lot of people trade these things very quantitatively, which is rule based. I'm going to sell this spread for whatever, $1.50, and I'm going to close it when it gets down to 20 cents. Or when the short leg is offered at 20 cents. And so I think that's why. If this had happened early in the day, maybe you'd see a little bit more people getting burned. But in one of the most widely followed zero-day Condor sellers, she actually made money yesterday. So and she just does it, methodically on a rule-based approach. So. The fact that it happened late in the day was kind of good for that community, and it was a little weird. I mean, some of the guys I talked to were like, "This almost feels like a flash crash," because it was kind of really fast and it wasn't showing up in the other asset classes. I don't think bonds moved. I don't think gold or oil really did anything. It was just this really sharp, S&P and equities sell off, and also you look back and I think we were up like 10 out of the last 11 days. We're up 16% since October, right? So, you know what? We can give back a couple percent. There's no reason to panic. And, and that was kind of like, today almost feels like we're just back to business as usual. Maybe vols will stay a little bit higher. But it kind of seems like it was just an odd blip.
An odd blip indeed. Speaking of odd, great segue into some of our other trades here that resonated with us here on the network this year, listeners. Let's go out to September 21st first. This is a trade that was actually highlighted by the FLOWMASTER back on this show. It just stands out as an odd one, which again, appropriate for this segment. This is everyone's favorite name. This is KWEB, aka Crane Shares CSI China Internet ETF. Say that one 5 times fast, listeners. The stock back in September was trading $26.50. It's trading almost exactly there right now. It's 6 cents away right now. So spoiler alert for how this one worked out. But at the time with the stock around that level, we saw someone coming in and buying almost 63,000. So this is not a small trade. of the Nove 3435 vertical. So yes, a $1 vertical, not quite $10 out of the money, but pretty darn close. In a name like KWEB, they paid 4 cents for this bad boy. They paid 11 cents for the 34s, sold the 35s for 7 cents. And as you might imagine, it's just one of these trades you just scratch your head and say, why? What are you doing? Why are you buying a nearly 10 handle out of the money vertical? A vertical for $1? What are you going to even make on this thing? And for such size, 63,000 times. Spoiler alert, the stock didn't go anywhere, listeners. So the stock closed at 27.66. So this vertical blew chunks from the outset. Maybe that's why they only spent 4 cents on it. You do anything 63,000 times, it's going to add up. And these were all still open, obviously, at expiration. Paper dropping about a $250,000 on what I would politely term a nonsensical trade. Mr. Flowmaster, do you recall this one? Because you came up with it. And then what are your thoughts on this size, far out of the money, $1 vertical in your favorite name, KWEB, sir?
Well, it's funny. I've been talking to friends about some of these ETFs that sell 0-day or 1-day puts, and some of them do calls. And basically, they're kind of these structured, I don't know, there's a couple symbols. QQQY is one, IWMY, JEPY. They're worth digging into because they literally sell an at the money or slightly in the money put every day. So you have the downside risk, but you also have some pretty steady income, and therefore the div yield is very, very high on these things. And they were actually talking about how the vol in KWEB is very attractive for something like that. So I don't know if the spread, I don't think the spread was kind of playing it that way, but when you're talking about, the Asian markets and the ETFs that invest in those markets and make them accessible to U.S. investors, there's a lot we don't know, right? So I actually think the vol's going to be high-ish because there's a lot of unknowns there. And it is a big trade. I don't know if it's on the back of something else, possibly. But it's the whole kind of China economy, as in a lot of the discussions about, the U.S. debt issue and interest rates and soft landing and all this kind of stuff, the China deflation scenario also had people somewhat panicky for a while this year. It's another one of those things, like Andrew said, that we were all worried about and nothing actually happened, or nothing's happened yet. But the fact that the Chinese government really mixes into things much more than most other economies, and that the fact you can't even trust the data so much, means that there's kind of a lot of unknowns in that, and I think it's interesting to see people using the options to kind of get the payoff profile they like. I don't know. I really don't know what the motivation was on this one.
It was to scoop some money, and it did not work. Let's keep on rolling. Speaking of scooping money, we get asked all the time, what is the most dubious, the most shady trade you guys have seen all year? That's a hard question to answer, but I may nominate this one for the list. This was from August 7th on the show, listeners. This was in CPRI Holdings Limited, ticker symbol CPRI. I think to call these ridiculously well-timed is charitable. At the time on the show, listeners, we profiled someone coming in and scooping 5,064 of the September 42 halves. They paid about 77 cents for those bad boys. The stock at the time was $35.62. I should note they were pre-earnings, so this is definitely an earnings swing at the bat. So they could have been just specking on earnings, and it could have worked out in their favor. But man did it. Turned out the next day on the earnings, they announced some takeover news. The stock popped nearly $20 on that news. They ended up closing these calls a couple of days later on Thursday for $11.60. Yes, they made nearly $11 on these bad boys, over 5,000 times. So you're talking about $5.5 million in your pocket in the span of a couple of days. When I look back on the year, the ones that were just very conspicuously well-timed, this one resonates for me. I heard you audibly nodding your agreement there, Mr. Meatball. Did you notice these this year, and what are your thoughts on someone hitting a homer here in CPRI Holdings Limited?
I remember seeing that, and it was incredibly well timed, is all I can say. But yes, I did see that.
A couple others here, but we have a lot of others actually. Might run a little long today, listener. This is our last show of the year, after all. So just bear in mind, give you folks some extra content here to roll you on your way. Roll, pun intended. Let's get to our next one here. The quote unquote best put spread or roll we saw this year, and I use best in air quotes, listeners. Goes out to everyone's favorite NKLA. You know the saga with NKLA. I won't belabor it. Back in April, we saw this trade. It was the July-October half. Yes, 0.5 put spread. Going up for a dime. Paper buying the Ox for 18 cents, selling the Julys for 8 cents. It wasn't even a roll. It was opening on both legs. So they were just putting on this half put spread calendar, obviously, for a dime. 100,000 times. So yes, they spent, a whopping $1 million on this trade. They liked it so much they came back and did it nearly 500,000 times. So you're talking $5 million they're putting out there on this, shall we say, ridiculous calendar. Now, I should say, to give them some props, the stock was 89 cents at the time, so your strike selection was pretty limited at that point. But how many times, listeners, have we joked about trading cheap options on a cheap stock? Well, here you go. A dime on an 89-cent stock. Guess what happened? The stock closed at $1.02. So it didn't go the way of the dodo. These people probably had some shares against it, so they probably weren't too sad to see that outcome that it didn't go the way of the dodo. But also, just the notion of spending $5 million on anything and having it go the way of the dodo, let alone something as ludicrous as this half put calendar in NKLA. It kind of makes me chuckle. Mr. Flowmaster, did you notice this one? And what are your thoughts on someone spending some money on some downside in NKLA that ended up going out worthless, sir?
I vaguely remember that one. I guess I tend to get more excited about the upside scenarios. It's I don't know. I'm near the end of the book, the Elon Musk biography by Walter Isaacson, and so the whole electric car universe and transition. It really is an interesting time. NKLA's definitely had their problems. I don't know. There's still a lot of large blocks of capital out there that is happy to be involved with these. I don't know about that specific role, what they were thinking, but sometimes people do strange trades.
Speaking of strange trades, if there was a theme to the odd block this year, it was maybe we all learned some lessons about trading options on cheap stocks, in particular puts on cheap stocks. Sometimes they can work out. We had a few examples of that. Going back to March of this year, we kind of have jokingly talked about someone back in Credit Suisse. You remember them, listeners? Oh, how the mighty have fallen this year. Back in March, we talked about someone scooping 4,076 of the March 2.5 puts. They paid 56 cents. These were expiring on the 20th. These might have been weekly, expiring on the 24th even. So weekly 2.5 puts. Again, they paid 56 cents for these bad boys. The stock at the time was about $2.06, so they were 50 cents in the money, these puts. Close to it. Spoiler alert, you know what happened with Credit Suisse. These ended up working out. The stock plummeted the following week, ended up closing at 86 cents on the expiration for these options. Paper made close to $500,000, at least on the options. Obviously, they probably had some underlying maybe against it. It probably wasn't a straight spec, so in which case, maybe they weren't overly happy at the end of the day, but purely from an options perspective. This one ended up working out. If that lesson wasn't hit home enough for you, let's go back to February of this year, listeners. Another name, how the mighty have fallen this year. Rite Aid. Remember them? Ticker symbol RAD. This one at the time we joked about as our quote-unquote trade of the year. Again, kind of damning it with faint praise because it seemed so ridiculous on its surface. It still is ridiculous, but at the time, back in February, someone came in and loaded up on 10,000 of the DEES 3 puts for about $1.50. They paid over a little under because the stock was $3.90. Stock wasn't $3. They paid almost 40% of the value of the stock for these puts. They paid $1.54 for these things when the stock was $3.90. We said at the time, what are you doing? This seems just like a lot of money to spend on these puts. You could do this in other ways. Nevertheless, the stock had plunged to $2 by March expiration, so it fell nearly $2 from where it had been trading. By July, the stock was trading $1.50. It was delisted in October of this year. What the remnants are floating around out there for about 17 cents. So if you do the math, that $1.50 ended up working out, but it's just a rough way to go about making some money. Mr. Meatball or Mr. Flowmaster, any thoughts on, I guess, one of the themes of the year, which is you can make money sometimes in really cheap, I should say expensive puts on cheap names. It's just maybe not the way you should go about it all the time.
Well, I'll jump in on that. Yes, you can. That the Credit Suisse one kind of bugs me because I got long the stock after it got creamed and didn't do me very good. It also reminds me of Bear Stearns put back in 08, right? When the stock was 50-ish and the 25 strike puts started trading and getting bought for $2, $3, $4, and everybody said, this is crazy. And sure enough, the stock opened on Monday at $10. Actually opened up at 2, and I think it bounced back to 10. But yeah, you can make money on stocks going to zero. But you are capped on how much you can make. So, but I mean, that's the kind of the beauty of options is whatever your scenario is, you can design a trade that reflects that view and makes money if it works out.
Oh, get out of here on the weird trades on this one. If you want more of this, listeners, we'll have a boatload more tomorrow on Options Oddities. Head on over there to the pro side. We'll have a lot of payoff fun there. But I can't get out of here, Henry, without talking about those absolutely absurd GameStop calls you talked about just a couple of weeks ago. I just went and checked right now just to make sure they are still, yes, they are still open. These are, of course, everyone's favorite, the Jan 127.5s. I kind of wish they didn't go up so close to the end of the year because everyone's going to say we're recency bias. But we did even title our episode that week, is this the worst trade we saw of the year? It's certainly up there, Mr. Flowmaster. You spotted these initially. You think this is the year winner for absolute quote-unquote best trade of the year?
Well, yeah, almost 138,000 of those are open. Looks like today they're offered at a nickel. So anybody that sold them at a dime, you can take your 50% gains. Yeah, that's a pretty wacky one. I don't really know what to say about it because not only is it that this scenario, whatever that is, what are we talking? Literally, an 8-9x, 800% out of the money. All of us would be like, well, that's crazy. But you know what? We know what that stock did do in 2021. So it's not that crazy. But what is crazy is paying a dime for the 127 puts when you could buy calls, when you could buy the 60 calls for 12 cents at around the same time. So that to me is very ill-advised.
They skipped that chapter in Natenberg as we skip to Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. We're already running long here, but we're having so much fun here, winding down the year, listeners. We can run a few minutes long just for you folks because we like you. I want to go out there now. It is that time, listeners. It is time for predictions for next year. I want to start with Mr. Uncle Mike first, obviously. A lot to unpack. I do have your prediction for where VIX will close this year, Mr. Uncle Mike. We'll reveal the winners of that one, or at least the closest looking, tomorrow on Volatility Views. I don't have it in front of me right now. But Mr. Uncle Mike, as you look into your crystal ball for 2024, what is on your horizon? What are you looking forward to? What are you dreading? And then also, can we get a VIX close for the year next year prediction from you, sir?
Well, in terms of what I'm looking forward to is my Intercontinental Belt. Is that official yet, Mark?
I'm glad you reminded me of that. Yes. Let me Let me just mention that right now. I had that data in front of me, and I got so caught up in all the madness, I forgot. Our final totals for the year, Andrew. And this, by the way, listen, this is our wrestling trivia game for this year, 80s wrestling trivia. Andrew, managing an impressive 3.5 points. Most of those were gifts from me, but nonetheless, Andrew on the board, 3.5 points. In second place, we had the Meatball, 14.5 points. So it wasn't exactly within 1 point. It was more like 2 you would have needed, but appearance on Monday would have made it even closer for you, because then you would have, if you got it, you would have gone out at 15.5. And Uncle Mike TOSAW ended the year with 17.5 points, so he wins by 3 points. Obviously, if you hadn't gotten it, it would have been 16.5, so it would have been a 1 point game. So it seemed like it was coming down to the wire, and it was pretty close on the Monday show, but Mr. Uncle Mike taking it. So congratulations to you, sir. At some time in the distant future, I will get that awesome replica IC belt off my desk into you.
Very honored to be your champion.
I would like to say that Andrew's point should count toward mine.
I knew you were going to say that, but alas, that is not how the game works, sir.
Hey, this ain't a handicap match. This is a three-way battle.
Well, I'm just saying, you're only taking us one-on-one at a time, right? Like, if I had been on all those episodes, I would have picked up way more than 3.5 points.
Maybe.
I'm just
quite
saying.
Possibly, but I cannot control, sir, when the Rock Lobster sums in for you. I can just try to give him some pity points every now and then.
Hey, I got the belt. You don't like it, I don't care.
Hey, to be the man, you got to beat the man, and you did so this year, Mr. Uncle Mike, so congratulations to you. In addition, sir, what do you got in store, you think, for next year?
S&P 5200 on this show a year from now, and I guess you wanted what, the VIX for the end of this year, or the VIX
end
for the
of next year? End of next year.
I'll go with the VIX for the end of next year, 12.08.
Yeah, okay. Be getting some seasonality in there as well. Interesting. Next year, lots popping off by November of next year, so who knows? Maybe we'll all be spent by December. Mr. Meatball, same question for you. Actually, you don't need to do the VIX, because I think you're going to be on Ball Views with me tomorrow, so you can do it then. But you're looking ahead to next year. What stands out to you? What are you looking forward to, dreading, any of the above, sir?
I am, it's interesting. We get excited about rate cuts, but rate cuts aren't always bullish the market. I'm going to say, I'm going to say 49.50.
49.50. Wouldn't that be hilarious if we had a year of aggressive rate hikes this year and the market exploded up, and then we have aggressive rate cuts next year and the market tanks? Have to rewrite all of the economic textbooks at that point. 49.5, you said, sir?
$49,950.
All right, Mr. Flowmaster, same question for you, sir. You do have to do a VIX, so what are you feeling for VIX and anything else next year that you're keeping an eye on or dreading or anticipating, sir?
Well, I think I don't think they should really cut rates. I don't really understand what they're thinking. Like, I think we can all kind of happily exist up here with rates around 5%, 4.5%. For VIX, I'm going to say 14.5 end of next year, so not much higher than here. But I actually think we could see a scenario where they do cut rates once or twice, and people get a little concerned that this wasn't needed, and they're using up some bullets that they might want to save for some sort of a crisis. So, and then in SPX, I'm thinking 50-50 at the end of the year, 5050.
SPX 50-50 for the Flowmaster. All right, listeners, that's going to do it for the Around the Blocks. Also going to do it for our year here. Crazy to say out loud. Our year of 2023, at least on the option block. Don't worry. More content still to come. TWIFO coming up after this. Tomorrow, Vol Views. And then options, oddities before we take a hiatus for the rest of the year. Even that said, I may find my way in the Southern studio here to get some other content out for you. So fingers crossed we can make that happen. Before we do that, one final time, let's go around the horn. Let's start with the Uncle list of Mikes. Mr. Uncle Mike, sir, if they want the Uncle Mike mobile to show up at their doorstep in 2024, where should they go? What should they do?
stcharleswealth.com. Make an appointment with me. I'll be happy to give any of our listeners a call. I always enjoy talking to our listeners. Or follow me on Twitter at Mike TOSAW, TOSAW. Merry Christmas to all, and to all, a good night.
StCharlesWealth.com, the place to go to get the Uncle Mike Mobile to come to your house. He brings delicious gyros. It's a good time for all. Bring the kids. And Mr. Meatball, sir, what should they do if they want to get some VIX musings coming their way virtually via, let's say, computer, sir?
Yeah, go to optionpit.com. We're putting out, I think, important, valuable content every single day, around VIX, around volatility, around the S&P. You don't want to miss it.
Don't want to miss it. Optionpit.com, the place to go. And last but not least, the flowingest of masters joining us for the final time here for 2024. We enjoyed having the CBOE hot seat and the FLOWMASTER joining us this year for some insights. Before we go, sir, if folks want to get some more of that CBOE goodness in their lives over the next couple of weeks of their holiday trading, where should they go? What should they do?
CBOE.com/RMA is where you can see all of our platforms and data offerings, and you can request a trial. And I will say that if anybody is active on LinkedIn, I've been putting up the 12 Days of Data series. And today I am on the 8th day. And at the end, I'm hoping to have a sing-along. So, so you can anybody can look me up, Henry Schwartz at CBOE on LinkedIn, and you too can enjoy the 12 Days of Data.
I may have to tune in just for the sing-along at the end there. That sounds FLOWMASTER singing. That's music to my ears and or making my ears bleed. I guess we'll find out. Go to CBOE.com/RMA for the data, listeners. Then you want the singing. You want that quality singing. I never thought I would say these words. The quality singing of Henry Schwartz. Find him on LinkedIn. I don't think you can search for FLOWMASTER on LinkedIn, at least not yet, but you can find him over there, SCHWARTZ on the old LinkedIns. That is going to do it for us here on the old OB for this year. Thanks again for joining us. Hang out. I'll be back in a little bit from the Southern Studios to bring you all sorts of TWIFO goodness. Going to do our year-end palooza there as well. Always fun. Back again tomorrow for Volatility Views. Again, the year-end finale should be a fun time had by all, and then one final options oddities for the year. Then we're back again next year with another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.